let me just ask you first, even before the coronavirus, do you think we've already seen peak auto? I mean, were we already going to see declines in annual sales out of China, out of the U.S., out of Europe?
Yeah, good morning. That's a good point, I think. We already anticipated that the U.S. market as well as the European market has reached its peak. We are anticipating that they remain at this plateau level with a slight erosion in sales, unit sales on an annual basis. But except for the Chinese market, none of those markets has yet entered into a real cyclical decline. So when comparing with their peaks in 2017 or 2016 for US and for Europe respectively, we are just around between 3 and 4% down. So markets are still holding up pretty well, except for China, which was also the reason where we had revised our forecast for the current year, given the impact of the coronavirus, where the market is already in decline.
Falk, good morning to you. What worries you most for the sector? Is it supply chain disruption or demand destruction in the countries that are affected? And there's an increasing list of countries, of course.
Well, right. I mean, in effect, it's both things. It starts, I guess, with a supply chain disruption, but that goes along then with people not being able to go to work, not exercising their jobs. The lorry drivers might not drive or transport the goods and things like that. So I think they are just very related, those two issues. On the supply side, currently, it looks like we don't see any negative impact yet outside China, except for one small plant in Italy from Fiat Chrysler, where there had been some parts missing and production had to be stopped. But otherwise, things are running relatively smoothly currently. You also have to take into consideration, certainly, that we have a certain amount of stock, because when you ship parts from China to Europe or to the US, it takes a couple of weeks. So maybe the worst is, or the critical test is coming up in the next couple of days.
If there's a demand problem, Falk, I mean, this is the kind of thing that central bank policy can at least theoretically help with, right? I mean, for example, and I'm not saying this is going to happen, but if the Fed cuts rates by 50 basis points, that makes it theoretically cheaper to borrow money to buy a car if you can get the loan, and then more people will pick up a new product. Isn't that right?
Theoretically, that's correct, but we are already at such low interest rate levels that I don't think that marginal interest rate variations make a difference here in the consumer's willingness to buy a car. I think it's more on the one point we just discussed is the supply chain, that cars will not be in the showroom. But the second point is that the consumers don't want to go to the showroom or are not able to go to the showroom because the showroom is closed. So I think it's not so much about their perception or their willingness to buy a car. It's just about the situation that scares them and the fact that they might not be able to shop.
Falk, are you concerned about, with that as the backstory then, concerns around supply disruption and indeed demand? Are there companies with more stretched cash positions than others that you would be increasingly concerned about?
Well, among the key European auto manufacturers, we are not concerned yet about their cash position. Liquidity is pretty strong. They've piled up quite some cash over the last couple of years with good earnings and good cash generation. They have backup lines. So, and that's the reason why you have not seen rating actions, negative rating actions, just because of the coronavirus. We had to take rating actions, negative rating actions, over the last 6 to 12 months. But this was mainly driven by the erosion in profitability, by the challenge and the transitioning towards electrification, the huge amounts of investments that are necessary there. So I think the effects of the coronavirus on the company's ratings has not been there yet, and we do not anticipate that as long as we see that as a temporary issue. And as I just said, liquidity is sound and should bridge that time.